But what does a Bitcoin futures ETF trading in the United States mean for the crypto industry? Well, diving in with us is Preston Byrne, partner at corporate law firm Anderson Kill, to discuss. So welcome to the show, Preston. What is the significance of this moment, having a Bitcoin futures ETF launch on the New York Stock Exchange for trading following 8 years of rejection by the SEC?
Well, the significance of it is that it's the beginning of the long march of Bitcoin through the institutions. To date, Bitcoin has been a product which isn't the sort of thing which is traded in retirement portfolios. It's something which is traded on spot exchanges or on kind of funky derivatives exchanges and peer-to-peer. And this is really the first step in what I expect is going to be a decades-long pathway for Bitcoin to be regularized in the financial system and financialized as other products before it have been.
Hi, Preston. So, as you know, there's some disagreement within the crypto community over how big a deal this is, just because it's a futures ETF and not a spot ETF. And I've heard kind of two different schools of thought here. One is saying, whatever, it doesn't matter. It's an ETF. This is great. We're where we want to be. And the other is no, this is actually a consolation prize, and it's going to make a spot ETF just take even longer to arrive. What is your take?
I tend to take kind of a long-termish view. I don't day trade Bitcoin. I stack, full disclosure. And really it's just a signpost along the way. It's just an indicator, another marker. It's one less thing that needs to get done before there is a spot ETF. So I don't think it's necessarily a bad sign. It's almost certainly a good sign. And I think with sufficient passage of time, we will get a spot ETF. We just aren't there yet.
So, Preston, good to have you on. What role do stablecoins have in the reasoning for not having a spot ETF? Do you think that the SEC is reluctant to do a spot ETF as long as the report on stablecoins is yet to come out? Do they have a concern about it, the effect of stablecoins on the spot market that's enough for them to say, you know what, well, let's let the CFTC regulate it on the futures exchange, and we'll just put out a product related to that and not have direct ownership of it, if you will?
I think that's right. I think there have been some allegations made in various civil lawsuits about certain stablecoins, which shall remain nameless at this juncture, being used for the purposes of market manipulation. Sorry, not gonna cross that line. But there are some lawsuits.
It's hanging by a thread.
Yeah, and so the question, I guess, from the regulator's point of view is, can they effectively police, the spot Bitcoin markets if there's potentially some massive fraud activity which is happening alongside? At the moment, I think it's unclear. We know that certain stablecoins have been implicated in certain unlawful activities, and certain stablecoins have been fined for being involved in certain unlawful activities. But whether I think that's sort of a threshold issue which the SEC is still investigating. So that, yes, I think stablecoins do play a role into this, but it's one of many different factors that I'm sure they're considering.
Speaking of which, I know you have a CoinDesk piece coming out about decentralization theater. That is, a lot of DeFi platforms are saying that they're decentralized, but only for some, but not all of their components. So maybe a project could be decentralized. Well, I wonder, so can a project be considered decentralized for legal purposes? And what does that mean in terms of the outlook for regulation?
Yeah, so a project can be decentralized for legal purposes. The important thing when you're looking at a project from a sort of legal advice point of view is you look for the particular points of articulation where a regulator is going to be able to press down and apply pressure on the project. So does this project have a user interface? Does this project have an oracle, which is run off chain, which is run by a private company? Is there an individual group of individuals or an organization who are effectively able to exercise control over the project in spite of the fact that the project claims to be decentralized? So that was the old way of doing things. And we've seen with a lot of there are some rumored, again, I'm not going to name names, but there are some rumored enforcement actions against a certain decentralized exchange relating to presumably operating an unlicensed exchange. And the outcome of that is TBD, but it's easy to see where, for example, if there's a web server being run by a company that's providing a service, even though there's a blockchain at the back end, the web server is where the regulator is potentially going to apply pressures. So what we're seeing now is a migration away from that onto client-side offerings that are run locally on users' computers. And a lot of these are just prototypes at the moment, but that's what's coming next, and that presents a real regulatory challenge.
So, Preston, speaking of unmentionable exchanges, do you think that some of them are using this sort of theater, this decentralized theater, to skirt authorities, potentially in other countries that have single-party rule over a billion people?
If there is a country which has a single-party rule over a billion people, as far as I'm concerned, breaking the laws of that country to provide information and services to the citizens of that country is not only a legal obligation, it's a moral one. So that's my view on that.
Preston, I want to just return to the ETF for a second. So I'm just curious if you could just tell us how you see this in terms of the big picture of U.S. regulation, because like over the few months, the SEC and the U.S. in general has been criticized for being kind of slow on regulation, kind of risk averse. There is this whole fiasco with the infrastructure bill. Does this ETF signal like a kind of regulatory friendliness or inclination toward regulatory friendliness on the U.S., or is it just not that significant in that aspect?
It signals that they finally caved after having the crypto industry bang on the door for 7 years straight, saying, "Please give us something that's exchange traded and Bitcoin related." So I think it's a signal in that it indicates that it's the first step of many in the eventual financialization of Bitcoin, cryptocurrency, and related products. For example, mining-backed bonds or things like that. So there's a whole range of financialization we could do at various pieces of the crypto stack that just hasn't been done. Because of the discomfort with market participants and the regulators with Bitcoin-related products. So this is really the first significant instance where they've said, listen, we're willing to overcome our doubts in order to permit this thing to exist. So it's a good sign. I think it's an unalloyed good sign. It may not be as fast as anybody wanted. It may not be a spot ETF, which is what most people wanted. But it's a step along the way, and it was a necessary prerequisite for those things to occur.
One other, in the news kind of story going on is Celsius Network and Nexo. They're under a cease and desist order from the New York Attorney General for selling unregistered securities. Also, Celsius CEO Alex Mashinsky has come out saying that he has been lending out Tether, or rather Bitcoin, in exchange for Tethers, which is against, I suppose, the lending agreements that people understand from Tether, that they would not do Bitcoin-backed lending in terms of they would rather accept dollars instead. So I guess out of these cases, I'm wondering why is Celsius Network and Nexo being targeted in New York? And secondly, with respect to the Tether, any revelations that come across that strike out to you that Tether may be lending out to platforms and issuing Tether for Bitcoin rather than dollars?
Yeah, so I'll deal with the first question first. So Celsius and Nexo, without being, I'm familiar with the filings. I haven't actually read the cease and desist letters that were sent out. My hunch, if I had to guess, is that the New York Attorney General probably says, well, you need a virtual currency business license to operate in the state of New York. And I'm pretty sure Celsius doesn't have one. But in addition to that, there's presumably a securities element as well. And we've seen this with Coinbase Earn, we've seen it with Celsius, we've seen it with BlockFi. These yield-based or yield-earning products, which are being sold by these companies, are deemed by several states, and in my opinion, likely by the federal regulator, as securities or investment contracts. So the regulator says that you can't really sell those unless you actually have a registration statement in effect in relation to that security. So that my guess is, again, I haven't looked at the filings. I'll have to double check, but my guess is it's a bit license issue and a securities issue that Letitia James has brought up. In relation to the second, Tether and loans, Tether is one of those rabbit holes which you can go down, and there are any number of conspiracy theories about how this site operates or not. What I will say is that the critics of the site have been fairly well over the target for the last couple of years in terms of their assessment of the situation. And Tether keeps getting egg on its face with settlement after settlement after settlement. So I'm not sure about the specific facts of Celsius Tether, but it wouldn't surprise me that Tether was engaged in Bitcoin-backed lending if they, to the extent that they haven't given full 100% absolutely transparent disclosure about what their holdings are, that leaves open a question mark. And that question mark can include anything. They could have Bitcoin, Marmot coin, a pile of rocks, whatever else they could possibly fit in there. As long as they can mark it to a certain price and then say tethers it back, unless they tell us more about what's in the pool. There's a question mark there. So it wouldn't surprise me if that had happened.
Mm-hmm.